Um, on today's on today's episode of our Business Fireside Chat, we'll be talking to a finance expert. This person has a wide vast of knowledge when it comes to finance. And he's going to be our speaker today, and he's going to take us all through all the things that we need to know regarding separating your business from your personal finances. He's an experienced accountant, he's a financial analyst, he's a data analyst, and a full stack software developer. He has over 5 years of experience in telecommunications, information technology, payments, and FMCG industries. He also has a passion for financial technology and believes in using technology to solve the most fundamental problems in finance and in business. Today, he'll be speaking on how you can separate your business and personal finance. He's currently the Chief Finance Officer of Hugo Host, and his name is Adedokun Ogubiade. Please help me welcome Dokun. Good afternoon, Dokun. Thank you for joining us. Over to you.
Good afternoon, Ada. I almost did not recognize myself when you were describing.
Wow.
Thank you very much.
Thank you for joining us. Yeah.
Okay. Good afternoon, everybody. So as I don't think I need to do any more introduction. As Ada has rightly said, I'm the Chief Financial Officer of Hugo Host, also a full stack software developer, trying to be a DevOps, of course. I have a couple of years of experience in finance. And today we are going to be discussing how to separate your business finance from your personal finance. This may seem like a very simple topic, but it is actually a topic that a lot of businesses have challenge in, because if you do not manage this very well, you have issues with growth, and you have issues with actually even making your business survive, because you may not even be able to account properly for the funds that you receive or expend in your business. So for this purpose, I'm going to be sharing my screen quickly so that I can take us through a few slides while we're at it. Okay. Ada, please confirm you can see my screen.
Yeah, sure. Yes, I can.
Okay. So how to separate your business and personal finance. So basically, let me present. Where's that present in this guide? Hold on, I am no longer used to, what do they call it? PowerPoint. I use most times we use Google presentation. Okay, so let's move on. Okay, so for the sake of this, let me just go through each slide one after the other. Now, like I said before now, separating your business and personal finance is actually a topic that every single business owner, even individuals, need to understand, either when they have already started off their business, or they need to, or maybe they are in business, or they want to go into business. And because doing this will help you fully grasp all your money situations within your business. So in order to separate your business and personal finance, there are a couple of key points I'm going to talk on. I'm not going to waste so much of your time. So the first being basic understanding of finance. Now, I know a lot of people go into business and they're like, accounting is the least of my problem. No, accounting is the most of your problem, because why businesses fail is because of lack of proper accounting. Now, if you do not manage your accounting properly, your business is bound to fail, because at the end of the day, you would think you are making money. I'm sure you've heard about a lot of people in maybe Ladipo market or the Balogun market that will be in business. You see the shop very full. Then after 2 years, they are still in business, but the shop is going down. You wonder how come? How come they don't know? Because they do not know. Most times they think that they are making money when they are not making money. Now, I said here, as a business owner, it is important to understand, at the very least, the basics of finance. This helps you get a clear picture of your business. even if you do have an accountant or financial analyst, having financial understanding helps you have a better understanding of your business. And if you have a good understanding of your business, you'll be able to separate your business and your personal finance, because you'll be to be in business and what needs to go to your personal finance. Now, finance is basically split into 5 parts in terms of your financial statement, apart from your taxes, of course, and the likes. Now, the first part is your revenue. Now, one mistake a lot of people make is that they always call revenue profits. You'll be amazed that a lot of people make this mistake. And revenue is not profit. Revenue is simply the total inflow that you received in your business before anything is paid out. Revenue is the total inflow. That is revenue. If a customer pays you 100,000, that is revenue. If you put your business money in the bank and you get interest, well, that is income. But you can also classify it as revenue, of course. So because those are all the inflow that you receive from your business. Then we have the costs. Now, costs are outflows, like it's like the opposite of the revenue. Now, cost is simply all the monies that you have expended from your business. Now, another mistake. I'll point out another mistake. Another mistake is this. When you're in business, you always feel that only the cost associated to purchasing the items you're selling are your cost. That is very wrong. That's a very wrong view. Cost includes everything that you pay in your business. For example, in your business, let's say you buy a t-shirt, fabric and everything, tailoring, costs about 1.5. Now you sold the shirt for 3,000. A lot of people make the mistake of thinking the additional 1.5 is their profit. No. Now remember that for your shop, you still need to pay electricity bill. You still need to pay rent. You still need to pay lawma, as the case may be. You may need to pay some local government people that will come around and collect 50 naira, 100 naira, 200 naira, as the case may be. Now you still need to pay your taxes. All those things to you are cost, alongside the cost of actually getting those items. Now the next thing is asset, liability, and equity. Assets are the things that you own. Liabilities are the things that you owe. Equity is what is left after you remove what you owe from what you own. Asset is what you own. Liability is what you owe. Equity is simply what remains after you remove what you owe from what you own, basically. Now, net income is simply after you have removed all items of cost from your revenue, what is left for you at the end of the day is what you call net income. What is left for you at the end of the day is what we call net income. Now, the final item here is simply cash flow. Now, as a business owner, very, very critical to you is the concept of cash flow. Now, I'm sure a lot of you have already said that cash is not profit. Cash is different from profit. Now, the reason why they say cash is not profit is simply because profit has a lot of things. For example, if you pay something for next year, it may show now if you are using accrual accounting, or you may show everything now. You may post-date application of this amount over a period of time, but you have already spent the cash. So what you need to do is simply to understand that whatever you spend is cash. That profit that you are seeing in your books may not necessarily be cash that you have. So if you think your profit is cash, you may not even know when you are out of cash. So this is the first thing. You need to have basic understanding of finance. I'm sure you guys will be thinking that, okay, how does this separate my business from my personal finance? If you have a full grasp, if you have full financial education of your business, it helps you understand what should go where. Okay, if you pay yourself, are you paying the business? No, you are paying yourself, which means you need to account for this. Now, the next thing on my slide is monitor your spending. Now, one of the most dangerous things in business is indiscipline, especially when your business is not properly structured in terms of you being separate from the business. Now, because if you keep spending, for example, you go out, you see a piece of t-shirt, you take cash. If your business and your personal finance are operating the same account, you just take cash, you buy the t-shirt. At times, you may forget that you have bought a t-shirt. Later, you ask yourself, okay, I bought a t-shirt. How do you even classify it? So you need to monitor your spending as a business in order to help you manage splitting your business and your personal finance, because it's a critical part of your business. Now, as a business, it is important to start at an early stage to know exactly what every penny in the business is spent on. This will give you financial discipline, very key. Financial discipline when the business starts to grow and expand. Do you know how much you spend per day, per week, or monthly? Do you know how much you spend for yourself per day? Do you know how much you spend for your business per day? Do you know how much you spend weekly? Do you know how much you spend per annum? And things like that. Now, some of the cash grabbing spending that should be monitored include cost of sales, staff cost, marketing cost. Very important, because they are the things that would naturally grab your money. Cost of sales are simply the cost of acquiring the things that you are selling. They will take a huge chunk of your finances. Now, the next one is staff cost. Now, if you are staff intensive as an organization, staff cost is another area in which you will be spending a whole lot of money. Then marketing cost, you want your business to grow, which means you'll be spending a lot of marketing. So you need to monitor the spending so that you can monitor your personal spending and understand that, okay, this spending is my personal spending. Then you can account for that properly. Now, the next item is incorporate your business. The next item is to incorporate your business. Now, what does incorporation do for your business? Incorporating your business gives you the psychological separation that your business exists as a person, and you start to treat it separate from your personal finances. Now, when incorporating business means you could have a business name. You could register it as an enterprise. You could register it as a limited liability company, this is dependent on the corporate structure that you would prefer for your business. If you have partnerships, you could register it as a partnership. Now, this gives you a psychological feeling in the psychology that, okay, this my business is separate. And of course, you'll be able to have a corporate account for your business, because having a corporate account for your business would mean that the business is on its own, you are on your own. You have your account, you have your business account, which means for you to spend money, you'll be spending money from your own personal account and not from the business's account. Now, the next thing here is operate separate bank accounts. This is very critical also. Now, operating a separate bank account. Now, managing separate bank accounts is a very efficient way of separating your business and personal finances, because you restrict your business payments to the business account and your personal payments to your personal account. Now, I just mentioned this. I told you very well that especially at the early stages of business, where there is really the difficulty of separation is so much. Now, because at the early stages, your business is like you may even be taking money from your account. You may be funding the business from your account. You may be taking money from the business to your account. You need to be able to balance this. Now, operating separate bank accounts for your business and your personal finance would automatically help you understand that, okay, when you want to spend money, you bring out your personal ATM card and spend from your personal ATM card while your business exists on its own. You may decide that you don't want an ATM card for your business, maybe for starters, such that even if you are pushed to want to spend, you naturally move money from your business to your personal account to spend it. Now, the next thing here is pay yourself a salary. Pay yourself a salary. Now, as a small business owner, we are always with the issue of, okay, this is my business. I can take money anytime I like. No, you cannot. It is your business and you want it to grow. So put yourself on a salary. Now, look at how much your business is making. Look at how much your business is making. Look at, if you really want to earn a salary at this point, how much salary can you earn? Not how much salary you want to earn, but how much salary, be realistic with yourself. How much salary can I actually earn? For example, your business is making a profit of 50,000, you are earning 100,000. Where is the other 50,000 coming from? Most likely it's coming from your capital, because some people start business with, say, between 2 million and 5 million. And by the time they do a calculation of the entire sum of the business, they have about 500,000 left. And they will now be asking questions of, where did the money go? Where did the money not go? That's the question. You need to plan these things. You need to plan that, okay, this is the amount I want to earn as a business owner. This is the amount my business is making. reality. My business is making 50,000. I want my business to grow. It means that I should earn, say, 20,000, which is around 40% of my profits. Now, the next thing here is separate receipts. Separate receipts. Now, don't bring your personal expenditure to your business as a receipt that, okay, just put in this receipt. Your personal receipts and your business receipts are two separate things. Like we are trying to achieve here. Your business is separate from your personal finances. Your personal receipt is separate from your business receipt. Pay for your personal receipts from your bank account and keep them in your house. Your business receipt should be in the business and they should be paid from your business. Separate these two. Separate these two. Now, create a budget. Create a budget. Now, when I say budget, I'm not just talking about business budget. I'm talking about even personal budgets. Now, for example, I don't know how vast we are in personal finance, but I'm sure a lot of people, maybe psychologically, have a personal budget, a monthly personal budget that they just look at and say, okay, this is the amount I'm spending today. This is the amount this is the amount I'm going to spend this month. Or maybe they've just put down, like, say, 50,000 naira or 80,000 or 100,000, depending on the amount that you can afford to spend, and put that down and say, this is what I'm going to spend. And if you are going to operate a budget and you are conscious that this budget is coming from the business, you will need to plan the business budget alongside your personal budget, because the personal budget will be funded by profits from the business. So maintaining both a personal budget and a business budget is very, very critical for you to achieve separation of business finance from personal finance. The next item here is maintain a cash reserve. Now, like I said, maintain a cash reserve. Now, most businesses do not have cash reserves. They don't have an amount of money that, okay, when all chips are down, we can spend this. Or when everyone falls down, this will be available for us to spend. In your business, maintain cash reserves. In your personal finance, have savings. Have investment, but still have savings. Because when you have emergency situations, you cannot pay for emergency situations with investment. You can only pay for them with cash. That's why they always say have maybe a 60-40 or a 70-30, 70-30. 30% for your savings, 70% for your investments, and maintain that, so that when you have emergencies, you don't have to go to your business and remove money to fund your personal endeavors. Now, the next is, the final is be disciplined. Okay, so this text is a bit long. Now, be disciplined simply means that know what you are spending your money on and spend wisely. Spend very wisely, because the moment you stop being disciplined about your finances, automatically you are beginning to crash even your business, because financial indiscipline in your personal life will affect your business life. Because in your business life, you need to be disciplined. For you to manage finances in business properly, you need to manage your own personal life properly. And if you do not manage your personal life properly, it means that you may have issues. You may have issues managing your business finance. So be disciplined, so that when you separate, you don't end up going back to the old ways. Thank you very much. Ada, over to you. Hello. If there are any questions, you can ask. Yeah, there are questions.
Thank you so much, Doku. Thank you. That was really insightful. Really, really insightful. So over to everyone here. So if you have any questions, you could drop them in the comment section and I'll just read it out. Or if you want to just speak, it's fine. You could just indicate that you have a question and you can go ahead. So please drop your questions. This is the time where you need to ask all the questions that you've had in your heart. Trust me, Ade has all the answers. So shoot, please ask your questions. I think someone is asking, someone is saying that he will need a copy of the teaching. Is that possible to make that
Yes,
available?
I'll
And
share that
then,
with you.
oh,
Yeah, I would. I'll make it available to everybody. So the teaching would be available to everybody.
so guys, questions, please. Okay, so someone has a question. Yeah, might. He says, "Thank you for the insightful message. Please, do you have some example of application one can use basically to manage the finances as discussed? Kindly recommend."
Oh, sorry. So thank you for that question. So you could actually use QuickBooks. I don't know how funded your startup or your company, your business is. You could use QuickBooks. QuickBooks is a way to manage. There are smaller accounting packages like the Wave app. We have invoice.ng to help you manage invoices. There are so many things you could use to manage your payments, and also your accounting.
Ekemini has a question. He said you mentioned something about Accura expenditure. I think it means actual, I don't know. Expenditure. Can you talk a bit more about that?
Okay, thank you, Ekemini. That's an awesome question. I actually expected somebody to ask it. Okay, let me use a very simple example to explain it. Now, normally when you want to pay for your rent, you pay for your rent in advance, which means you are paying for a period of 1 year. Now, say you are paying between January and March next year. Now, if you were going to prepare your account based on cash received and cash spent, you look at all the amounts that you received this month against all the cash that you have paid, which means the entire rent you have paid in bulk will be matched against what you have received as money. It's more or less like saying you sold 50,000, you paid a rent of 30,000. Now that rent of 30,000 is supposed to be for a period of 1 year. Now, normally for non-accounting people, now you just say 50,000 minus 30,000. My profit is 20,000. But accounting wise, you need to spread, since that 50,000 revenue is for 1 month, you need to spread that rent across all the months that it is for. For example, if it is 12 months, you divide the rent by 12. It is 1/12 of that rent. That's if you paid for 1 year. It is 1/12 of that rent that you will take as expenses for that 50,000. Now, if you also recall, at a point I said that cash is different from profit. Now, if you've divided your rent by 12 and you're only taking 1/12 of that to calculate your profit, Remember that you did not pay only 1 month, you paid 12 months, which means that the cash that you would have available would be less than the profit you have made. Does that clarify it? All right, thank you.
If you have more questions, you could drop your questions or you can ask. Okay, somebody's asking, a community asking, but where do you report it? Sorry, Adi, are you there?
Oh, sorry, I was actually speaking.
Hello.
The cash that you have spent naturally will go out of your cash or bank account, as the case may be, right?
Yeah.
But the amount that you have, the total amount you have spent normally should go to expenses, right? If you're capturing all your cash.
Exactly.
But because you are accruing it over a period of time and you are saying, okay, I only want to capture what is relevant to this revenue, because it's very important you do this. Sometimes you may have made expenses in the past that you need to capture now, just to understand where you are at the moment. Now, that part of that 1 month that you have taken out of the entire amount, you take to your income statement, which is a part of your financial statement, as an expenses. Then the remaining parts, the remaining part will be an asset to you. Now, the reason why it's an asset, remember you paid in advance. It means that you have paid something in advance. Now, if you have paid something in advance, it's an asset to you, it means that you still own it. You are going to get benefits in the future. But the part that you have taken out now, you have to expense it, which means every month you'll be taking a chunk, one month from that one that you have split into 12 months to take to expenses so that you can match correctly. But remember, if you are doing this, you need to maintain proper cash flow. You need to maintain proper cash flow. The reason why you are maintaining proper cash flow is because when you make these payments, cash is going out. That's it. Cash is going out. So you need to understand that cash has gone out somewhere. Otherwise, you say, okay, I'm making profit, but you do not even have cash. Does it make any sense?
Yes, it does.
Thank you.
All right, thanks.
If you have more questions, please let us know.
You can ask now. And also, as a business owner, I must also point out that it is important that I don't know, because a lot of people run away from having accountants when they are early on. But I think as business owners, we should actually have accountants. Even if you cannot hire one internally, just have a small accounting firm that will be doing some of your accounting for you. Very critical for your business, because the way an accountant sees numbers, the way we see numbers is different from the way every other person sees numbers. You may not have insights into, okay, I'm spending this over time. What would happen in 2 years if I continue to spend like this? That's what we call runway in financial analysis. So you need to understand your runway. What if my business closes today? How long can my business survive without making any money? So you need to understand your runway. And also, because separating your business and personal finance will allow you to think business and also think personal finance.
All right, do we have more questions?
Please, if you have more questions, you can ask. You can ask more questions if you have them.
So we don't have questions. I want to take it that we all understood everything that the finance expert had just said, and I hope that we'll do better with our finances because it's quite important. So so you could if you need the slides that he shared during the session, please drop your emails, so I will just send them to you directly. Please drop your emails in the comment section so I could have them. All right, so I'd like to call that an evening. Thank you so much, Dokun. Like you really did justice to this topic. Yeah, so I believe that we've all learned one or two things from today's topic. And like I said earlier, I hope that going forward we'll do better in our different businesses in terms of managing separating basically our finances, our personal finances from our business finances, because it's key. If you need to grow in business, you have to be very disciplined. And our speaker also mentioned something about being disciplined. You have to be very, very disciplined. So that is a very important part. So thank you, Doko. Thank you for your time, and thank you for sharing in your wealth of knowledge with us. Thank you so much. And thank you everyone that joined in. I'll be sending the slides that he shared this afternoon. I'll be sending them with all of us. So thank you so much, and enjoy the rest of your evening, everyone.